Are you paying more taxes than you should? Ever wondered if there's a way to keep more of your hard-earned money? You're not alone. Every year, countless individuals grapple with these very questions. So, let's talk about tax planning. In essence, tax planning is a strategic approach to managing your taxes. It's about understanding the tax laws and using them to your advantage. By planning ahead and making smart decisions, you can significantly reduce your tax liability. Having a tax strategy is not about evading taxes, but about maximizing opportunities to save. It's about exploring all the legal avenues available to reduce your tax burden. From deductions to credits, there are myriad ways to keep more of what you earn in your pocket instead of Uncle Sam's. So, are you ready to take control of your financial destiny? Let's dive into the world of tax strategies and see how you can start saving today. There are numerous tax strategies out there, but they all fall into three main categories. Firstly, we have tax avoidance. This is the practice of seeking ways to pay the least amount of tax possible within the confines of the law. It's about using legitimate methods to reduce your tax bill. This could involve making use of tax deductions, credits, and exemptions that are available to you. For instance, if you're self-employed, you might deduct your business expenses to reduce your taxable income. Tax avoidance is legal and often encouraged as it promotes investment and economic growth. Secondly, there's tax evasion. Now this one's a bit tricky. Unlike tax avoidance, tax evasion involves illegal practices to reduce tax liabilities. These can include underreporting income, inflating deductions, or hiding money and its true source. It's important to note that tax evasion is a federal crime, punishable by fines, penalties, and even imprisonment. So, while the prospect of paying less tax might sound appealing, tax evasion is definitely not a strategy we'd recommend. Lastly, we have tax planning. This is the act of organizing your financial affairs to minimize your tax liability. It includes long-term strategies like choosing the right investments and retirement plans, or short-term ones like deciding when to sell assets. Tax planning can be complex, but when done right, it can save you substantial amounts of money over time. It's all about knowing how to make the tax laws work in your favor, and often, it's advisable to seek help from a tax professional. Each of these strategies has its own set of benefits and drawbacks, and what works best for you will depend on your individual circumstances. What's key is that you approach your taxes proactively. Don't just wait until the last minute to start thinking about them. Understanding these strategies can help you make a well-informed decision about your tax planning. Now let's move on to tax deductions, a legal way to reduce your taxable income. Tax deductions come in various forms, and understanding them can be the key to lowering your tax bill. Let's dive into it. First up, we have standard deductions. This is a flat amount that the tax code allows you to subtract from your income before income tax is applied. The beauty of a standard deduction is its simplicity. There's no need to keep receipts, track expenses, or itemize your deductions. The amount varies based on your filing status, and every year it's subject to change. Next, we have itemized deductions. Unlike a standard deduction, itemized deductions require you to keep track of eligible expenses throughout the year. These can range from medical and dental expenses, state and local taxes, mortgage interest, and even charitable donations. The total of these expenses is deducted from your income. However, it's important to note, you should only go this route if your total itemized deductions exceed your standard deduction. Last but not least, we have above-the-line deductions. These are deductions that you can take regardless of whether you choose to itemize or take the standard deduction. They reduce your adjusted gross income or AGI, which is beneficial as many tax rules and limits are based on your AGI. Some common above-the-line deductions include student loan interest, educator expenses, and contributions to certain retirement accounts. Remember, the goal of tax deductions is to lower your taxable income. The lower your taxable income, the less tax you owe. It's like having a coupon for your taxes. Who doesn't love a good discount, right? But it's not a one-size-fits-all situation. The best approach depends on your individual circumstances. It's always a good idea to consult with a tax professional to ensure you're taking full advantage of the deductions available to you. Tax deductions, when used correctly, can significantly lower your tax bill. So don't let this opportunity slip through your fingers. With a little planning and organization, you can make your money work smarter, not harder. Another way to lower your taxes is through tax credits. Now you might be wondering, what exactly are tax credits? Well, tax credits are essentially a type of tax incentive, which allows certain taxpayers to subtract the amount of the credit from the total they owe the state. In other words, tax credits can significantly reduce your tax bill, sometimes even to zero. So how does this work? Well, once you've calculated your total tax based on your taxable income, you can start applying your tax credits. Each dollar of tax credits reduces your tax liability by $1. So if you owe $2,000 in taxes, and you have a tax credit of $500, your tax bill will be reduced to $1,500. It's as simple as that. But not all tax credits are created equal. There are two main types of tax credits: refundable and non-refundable. Let's break it down. Refundable tax credits are the kind that can result in a tax refund. That's right, a refund. If the amount of a refundable tax credit is more than the amount of taxes due, the difference will be given back to you as a tax refund. For example, if you owe $1,000 in taxes but have a refundable tax credit of $2,000, you'll actually receive a refund of $1,000. On the other hand, non-refundable tax credits can't reduce your tax liability below zero. If you owe $1,000 in taxes and have a non-refundable tax credit of $2,000, your tax bill will simply be reduced to zero. You won't receive a refund for the remaining $1,000. Understanding the nuances of these tax credits can be a game changer in your tax planning strategy. It's about knowing how to play the game and leveraging these credits to your advantage. Tax credits can be a powerful tool in your tax strategy arsenal. By familiarizing yourself with them, you can potentially save a substantial amount of money, and who wouldn't want that? So, next time you're planning your tax strategy, don't forget to consider tax credits. Now that you are aware of these strategies, how do you go about implementing them? Tax planning is not a one-size-fits-all endeavor. It's a complex process that requires a thorough understanding of tax laws, financial situations, and long-term goals. It's like putting together a jigsaw puzzle where every piece is unique to your financial picture. To effectively implement a tax strategy, it's crucial to seek the expertise of a tax professional. These are individuals who have dedicated years to understanding the intricacies of the tax system. They keep up with the ever-changing tax laws and know how to navigate them to your advantage. Imagine yourself in an intricate labyrinth. You know there's a way out, a way to the treasure, but the path is convoluted and filled with potential pitfalls. That's where a tax professional comes in. They're your guide, your map maker. They can lead you through the labyrinth, helping you avoid the pitfalls and find the most efficient path to your treasure. In this case, tax savings. A tax professional can help you identify the tax strategies that best suit your financial situation. They can assist you in understanding the difference between tax deductions and tax credits, and how you can leverage each to reduce your tax liability. They can also help you plan for the future by setting up retirement accounts or education savings plans that offer tax advantages. They can help you implement strategies like income splitting, where you distribute income within a family to take advantage of lower tax brackets. Or perhaps a tax deferral strategy, where you delay tax payments by choosing investments that only tax upon withdrawal or sale. Remember, tax planning is not an annual event, but a continuous process. Regular check-ins with your tax professional throughout the year can help you adjust your strategy as your financial situation changes. In essence, a tax professional is your ally in the quest to save on taxes. They can help you navigate the complex tax terrain and implement a strategy that best suits your financial situation. With the right plan in place, you can start saving on taxes. In conclusion, tax planning is an essential part of your financial planning. This video has walked you through the crucial elements of tax planning, from understanding the different types of tax strategies to exploring tax deductions and credits. We've delved into the importance of knowing how to leverage these strategies to your advantage. It's not just about paying your dues, but also about recognizing opportunities to save and grow your wealth. Tax deductions can reduce your taxable income, while tax credits can decrease your tax bill. Implementing a solid tax strategy is like setting a roadmap for your financial journey, guiding you towards more savings and less financial stress. It's about being proactive, not reactive. It's about taking control of your financial destiny and not letting tax season catch you off guard. Remember, every dollar saved in taxes is another dollar in your pocket. Start planning today and keep more of your hard-earned money.